Good evening, ladies and gentlemen. Thank you for your attendance here with us today. And good morning to those of you in Australia and New Zealand. I can see we've got a great crowd here today. A lot of old friends here. Marcel, nice to see you, my friend. Daryl Kay, Albert, yes. Bernard's with us. That's great. The other Daryl's here. He came to the tutorial at Waiheke Island. Fair dinkum Aussie. I know that'll be my mate. Hello, Shift. And Farabor, it's nice to see you here. I haven't seen you for a while. Mark, Marshall, lots of people here. Sita, hi, nice to see you. Honey Scott. Timmy, nice to see you. Todd, gosh, I better not keep going through all these people, or we'll be here all day. But great to have such a good crowd here. Welcome. As usual, it seems to be constant here at Queensland's Gold Coast. A beautiful sunny day. Pacific Ocean is bright, bright blue. We're at the start of autumn down here, but I'm not sure that makes a whole lot of difference. We had probably 10 or 12 days in summer that were just too hot for me anyway, but this is just beautiful weather, and the place just looked magic. So great to have you all with us. Today I wanted to talk to you, as you can see the title of this webinar, You Beauty Blue. You Beauty is a famous old Australian expression that most people in this country use. I use it all the time. I know Shift does. It's an expression of admiration or praise. If you have a bet at the horse races and it wins, you say, "You beauty." You might even say, "You bloody beauty," if you felt really passionate about it. And it can be used as a gerund and all sorts of other tenses. You might say, "What a beauty," or "That's a beauty," but it's a universal Australian expression of praise or admiration. And I've applied that to our blue line trades here today. And the first signals we introduced at the Danielcode back in 2007, still going strong. I've got a few charts I want to show you. We'll run through them. I want to show you the standard blue line trades. I want to show you how to trade them. When we finish that section, I'm going to show you a small presentation by my mate Ben down in Sydney, who you better known to you guys as FXFX. He's one of our most senior Danielcode members. He's been with us pretty well since we started back in 2007, and he's a demon trader. He's done a couple of tutorials. He's a great bloke to have a beer with, lots of fun, very wise man, and he's kindly put together some charts for me that I wouldn't have been able to show you, and I think they'll surprise you, and they make a pretty interesting point. So that's going to be the next stage after we run through the PowerPoint. Then I'm going to go on to the Trade Navigator charts and show you quite a lot about gold. I've had a number of questions. A number of you have written to me asking specifically. Marilyn's just joined us. Hello, Marilyn. How are you? We've had a number of specific questions from our members and guests, and a lot of them are to do with gold, a lot of them are to do with other types of trading, so I'm going to go through all of those, and then if you have any questions you'd like me to answer, please type them into the questions box, which you can see, and I will deal with them at the end of this tutorial, as I normally do. So welcome, and let's move along. The thing is to get this thing to change. And there we are now. We're not actually going to talk about FracZen today because Daryl Mustang hasn't had a chance to get the end of April accounts up to date for us. We were hoping to have them, but he's had a few other commitments, and we'll do a special FracZen webinar for you next week, probably same time, same place. But you'll see your invitations. It'll be posted up on the front page of the Danielcode website, as it always is, and we'll dedicate that largely to FracZen. Lots of things happening in FracZen, all good things, probably a little bit early to tell you about them, so just putting that webinar off for a week might allow us to have more clarity on things we're doing, but our friend Sage, hello darling, who you all know, she's the keeper. Sage and Mustang, her husband, they're the keepers of the records of the performance of FracZen for us. It's pretty nearly a full-time job. She really does apply herself to this, for which we're most grateful. And she occasionally sends me a chart just to make me feel good for the day, and most of these FracZen charts do. And this one just came through. This is gold, just the last couple of days trading in it. A nice, easy couple of $1,000 there for you. To subscribe to FracZen is only $75 per market. So for $75, you could have had a nice $2,000 in gold, which is pretty cool. And thank you, Sage. Really appreciate that. Okay, on to the blue lines. We set out the rules for the blue lines. They're really simple. They're in the Danielcode trading manual, which you'll see at the website. Basically what we do is, you'll see from this chart here, is we have two stochastics. We have a fast stochastic, that is the one on the top, which is a 533 stochastic, and we have a slower stochastic, the one at the bottom, which is a 1433 stochastic. And these are rather special stochastics, because the biggest errors that come from stochastic studies are inside bars, which can be meaningful, but more often than not they're a null or a blank, and they're really just the market filling in time. That's the most common way that inside bars occur. And in a stochastic that gives weight to that, you get a distorted stochastic. These are DC stochastics, which you get with your Danielcode library. They were created especially for me by Trade Navigator. And they have the unique capacity that when there is an inside bar recorded, they're the ones you see in red. They're called inside bars because they're wholly contained inside the true high or true low of the previous bar. When an inside bar is recorded in the Danielcode stochastic, it doesn't actually plot the value for that bar. It plots the average of the last three bars instead, so you get a truer reading of the stochastic. I've had a couple of people say they don't see much value in that, but over the years I can tell you I've found it very valuable. And this first chart that we're showing you, we're going to deal with futures and Forex today, as we do. Let me go and get my highlighting tool so you can see what I'm talking about. Okay, here is a blue line trade from about 8 or 9, 10 days ago, New Zealand USD, and we had for that a blue line buy. Let's see where I can find that, New Zealand USD. I'll find it on the other chart when we get there anyway. And there's our buy signal. It's an absolute standard Danielcode signal. And what's required to create a Danielcode signal is you need to have three things happening at once. First of all, we need this fast stochastic here to be oversold or nearly oversold. Now, don't be too anal about this stuff. The overbought, oversold settings on these stochastics are 80 and 20. 78 is close enough to 80 for me, and 21, 22 is close enough to 20 for me. So you just can use a little bit of discretion there, but whatever you do, be consistent. So our first rule is that the market is at a blue line, which you can see it was here. This is a reversal blue line trade. This is the bar back here on which the blue line signal was actually created, but it's valid. Blue line signals are valid for 3 days, including the day of posting. So even though the signal was created off this bar, it became day 1 there, and it was elected on day 2. So at this stage here, we had the fast stochastic oversold. That's our first rule. We had target recognition. That's the absolutely primary rule, because without these blue line numbers, this particular setup doesn't work. Now, on a number of the charts, about 20 of them, I do the blue lines for you twice a week, but I also do them on all of the other charts as well, which you folks don't see, but I do that because I post these blue line signals for you. You will learn how to do them yourselves, but you must have the blue lines before you can get a setup. So we have the faster blue line there gave us a target recognition at this Danielcode number. We had the fast stochastic oversold, we had the slow stochastic oversold, and we had divergence on the CCI. You can see here this bar made a lower low, and the CCI stochastic was going up. It did not make a lower low. We can also look at divergence. I know this is something confused a lot of people. We can look at it in comparison to the previous bar, and we can also look at it in comparison to any other bar in the run. So this run started way up here, and it's run all the way down here, which means that we can compare the CCI, we're concerned with it for these bars here, this bar in particular, or this bar, doesn't matter, with any CCI reading for the whole of this run down. And you can see that right down here was the lowest CCI reading. So this became the momentum low for the chart as far as the CCI was concerned, and by the time it got over here, it actually made a higher low, and that's divergent because the market made a lower low, but the CCI, our patented proprietary momentum indicator, made a higher low. So that's divergence. They're the three things we're looking for in the setting up of the blue line charts, and that's how it creates the signals. Then this market ran up here. Now, the rules to trade the blue line is once you're in a trade, which you got into right here, you then go and you look at this fast stochastic. And the rules that I suggest, you can change this if you like. It's your money. You do it the way you want to. But the way I do it is I use a 2-bar trailing stop whilst the market is stochastic is moving up. And once it gets up above the overbought, oversold area, I then go and I use a 1-bar trailing stop. So as you see from this bar here, the fast stochastic had not reached the overbought line. So we maintained our 2-bar stop all the way through this. We didn't get caught with this outside bar, but it was almost certainly a TO3 sell. If it was, that's going to just highlight what's been happening lately. With these outside bars, you must take the stop and reverse. So if you happen to get short here on this bar, then the minute it took out the high of the previous bar, it had created an outside bar. And you had to take the stop and reverse, which means your stop would be there, you would be flat as it took out the previous bar's high, and then you go long. So if you're short 1, you need to be buying 2 if you get an outside bar, and that runs you up all the way into here. And look where it went to, just a few ticks away from the blue line up there, which was quite fantastic. And then that sets up the next sell. These charts are the weekend charts, so the current price action is not on them, but you can see how that works. Here's another example. Here's a blue line sell up here. The market's already reversed, so the signal probably came on the bar before it. Fast stochastics overbought. CCI's diverging. Market's made a new high. CCI has not. And the slow stochastic is perilously close to the overbought area, and that's what gives you the setup for these blue line trades. The next chart is the DAX. Here's a really standard, straight out of the Danielcode manual blue line trade. This market runs down here. First thing it must have is blue line target recognition, which it had. Don't worry if you're trading markets where you're not getting the charts published by me. I do the blue line signals for you anyway. You get that included in the Plus Signal subscription because I see the blue lines on all of the charts. So our first requirement here is blue line recognition. That's why they're called blue line trades. Fast stochastic is oversold. Slow stochastic is oversold. Go back to the CCI. The market has made a new low. but the CCI has not. There's the momentum low. There's the next momentum low. This low here that came on this big bar down is actually higher than the previous low in the CCI. So the market has made a lower low and the CCI momentum indicator has not, and that's our standard rules. Once this market takes off, and you've got long right in here, 3 ticks above the previous day's bar, we use a small buffer on our trading. We don't want to just get filled if it's 1 tick above or below. It shouldn't happen, but it does because people are sloppy traders. So we allow we add a 2-tick buffer to our futures trades and a 5-tick buffer to our Forex trades. I'm going to show you that in the Trade Navigator, in the Danielcode trade program that gives you an exact number to enter at and exactly where your stops go, which makes life very easy for you. So this trade was filled right there on that bar. So you went, once you were filled, you're going to use your trailing stop, 2-bar trailing stop. As this stochastic moves up and moves up and moves up, and right here, this stochastic gets overbought, which is in line with this bar here, this smaller bar. So at that stage, you've gone to a 1-bar trailing stop. So 2-bar trailing stop until it gets overbought, or 2-bar trailing stop until it gets oversold. They're both the same. Then you go to a 1-bar trailing stop, which would be underneath this bar, and you're stopped out right there for a very nice trade. If you were aware of these black lines, which are incredibly powerful, the Danielcode black lines, when the markets approach these black lines, I always suggest that you tighten your stops. And you can do that just off a 240-minute chart or a 60-minute chart, or better still, you can have Frax in and use that as your stop loss for smaller stops. Don't do it in the middle of nowhere. It's only when it approaches a blue line or a black line that you're going to tighten up your stops. And this trade, if you got it right, somewhere near up there, you got some part of $7,500 out of one contract. This is soybeans. I'm just showing you the same thing time and time again at the moment. Here is a blue line trade, another one. First thing we're looking for is target recognition. There's the blue line. You had absolute perfect target recognition. I think only 1 tick variance on the close. Remember, target recognition can happen at a bar high low or on the close. And the little dot to the right of the bar is the close. The one to the left of the bar down here is the open. So target recognition is valid both ways. So the first thing you had here was target recognition at the blue line. You had the fast stochastic overbought. You had the slow stochastic overbought, and look at the divergence you had. CCI made its high back here, and it's had 1, 2, 3 bars sliding away from the high, which tells you that even though the market is making new highs, momentum is failing. That's why we create these special studies for you. This, excuse me, CCI indicator, that's all part of the Danielcode library, which you get when you become a member, become a member of the Danielcode. Terry will give you all of that, and it will just slot straight into your Trade Navigator package. And that blue line sell there in soybeans was worth almost a couple of $1,000. Then you came down to this low here, and it made its low only 7 ticks from the Danielcode blue line. We do see much better target recognition than that, sometimes 0 variance, very often 1 or 2 or 3 ticks. 7 ticks is still within our allowable, and if you look down here, you'll see what? You've got blue line target recognition, you've got the fast stochastic oversold, you've got the slow stochastic oversold, and look what's happening with the CCI. This was the momentum low for the CCI way back here on this big bar, and here the CCI is making high lows, whilst the market is making lower lows, and that is divergent, so all the characteristics are in line, and that means that you would expect a buy signal to come from there. Let me shuffle some pages here, and those of you who traded today will see that we had a blue line buy for soybeans today, and up she went. I think that, not sure whether that is today or a bit later, but we had the blue line buy for soybeans was posted for Thursday, May the 8th. So that was pretty nice, and we saw that coming. There was actually a TO3 buy posted the day before on Wednesday. So you can see these things developing. Here I'm showing you a couple of variances of different types of blue line signals that are still valid. This is an older chart. These are taken from the weekend. And you can see what's happened here is the market roared up into here, hit the blue line, and that stopped it now. Same thing, fast stochastics overbought, slow stochastics overbought. Momentum is diverging. It's starting to make lower levels against its previous day. So that's a valid blue line signal. But look what happens. You get an inside bar, and then you get this slightly lower bar now. Under the rules of the Danielcode, that trade is not elected, because the way we trade inside bars is we enter at the true high, true low of the last bar that was not itself an inside bar. So you're still long, you've got perfect target recognition here on 2 days, and then it bounces up and it hits the next blue line up here at 136.22, and it turns around and runs away from it. And that was pretty clearly going to give you at least a small sell-off from there, which it did. So there just shows you that these blue lines, whilst they will pretty well hold any market when they get the setup, it doesn't mean it's the only possible blue line that will be affected. And I've got another example of that to show you a little further on. Here's dollar CAD, US dollar, Canadian dollar. Here's your blue line signal, same thing, absolutely standard. Stochastics overbought, other stochastics overbought. There's your divergence. It was actually just a few ticks lower than this one back here, which started off the momentum run. That was a blue line sell signal. It was elected the next day. You go to your 533, your fast stochastic, and you use a 2-bar trailing stop to follow it all the way down. And as you get down here, you move to a 1-bar trailing stop. Now, if you were trading this with your 2-bar trailing stop, you may or you may not count the inside bars. Remember I said to you most inside bars are nulls or voids. So on your count, you would ignore that inside bar, then that would make this 1 bar up, this would make this 2 bars up, and you wouldn't be stopped out, and you'd get the rest of this trade all the way down. The other thing that I'm going to show you later is that when you have a trending market, the most common counter trend is 1, 2, or 3 bars. This, if you do count the inside bar, is 1 up, 2 up, 3 up. That's 3 higher highs. If you didn't count it, it would be 2 up. Either way, you have an automatic sell underneath there. That trade was worth $1,700. So these blue line trades run for longer, and I know a lot of you don't like to trade too often, and you're looking for something a bit slower and more relaxed. Well, the blue line trades are your answer. Here is the another chart of the S&P, and here is your blue line trade down here. It's set up on this bar here. Excuse me. It had its target recognition of this 1805 number. Stochastic was getting down towards oversold here. Momentum indicator was diverging. There was the momentum low. Slow stochastic was very, very close to being oversold, close enough for me because I posted a blue line buy signal for you guys, and this is the reversal that even though this bar here on which I have the spotlight had target recognition at the 1805.50, there was another blue line underneath it at 1803.75, and the market wanted to find that, and once it had found that number, it did its stop and reverse, and then it was on its way. And these Danielcode numbers, these blue line and red line numbers, honestly, they're like magnets. You just look at this chart here, up it roared all the way up, real easy trade, never got touched with your stop until you got right up here. You're overbought, so you're on a 1-bar trailing stop. You got stopped out underneath this bar. If you understood the power of the black lines, those of you who saw this thing starting to reverse at the black line, or even as it approached the black line, tighten up your stops, and you got about $3,500 or some part of that out of this trade. Then right here you had a sell signal, and down it came. Wasn't a blue line trade because that wasn't a blue line, that's a black line. Down it came. This is a counter trend. 1 bar down, 2 bars down, 3rd bar it reversed, up it went to find the same number again. Now from there it pulled back, it hit the red line. This is the internal numbers. When markets are within the old trading range, they'll use the red lines and the black lines. When they're trending, they'll use the blue lines. It hit this Danielcode retracement number, which is part of your Danielcode library of tools, absolutely perfectly, straight back up to that black line again, 3rd time it's been there, did a little reversal bar there. So you can see that these numbers, I mean, I'm not going to drive you mad because I know most of you are not interested in numbers, but I've been saying for the last few months that, you know, I don't know how you can trade without these numbers. They are the most precise support and resistance numbers you will ever see. They are nothing to do with Fibonacci numbers, which are approximates sometimes, not even that. These are accurate and precise, and they're like magnets for markets. I mean, look at how this bar here had to get to that black line before it could do its reversal. Look at this bar right down here, how it had to go and test not just the first blue line we had at 1805, but had to find the second one at 1803, and then it spun around and reversed with high momentum and gave you a $3,500 trade up. These Danielcode numbers are magnets for markets. If you don't have them and you don't use them in your trading, you're really wasting a massive opportunity, because that's what drives all markets. Let's move on. Here's British pound, USD. These are charts from the weekend. As I told you, there's been some different price movement since then. And I wanted to show you this situation here. This chart the weekend before had a blue line right at the top of this bar. And that gave you a blue line sell signal, because the fast stochastic was fast enough at the time. It doesn't appear to be now, but it must have been, or it wouldn't have created a signal. The slow stochastic certainly was, and you had divergence on your CCI. And what that gave us was a sell signal. It came down 1, it found the Danielcode retracement, and it bounced all the way back up. Inside bar, filling in time, took off with this huge bar up, straight into the next Danielcode number, which gave you a new blue line sell. Again, fast stochastic's not quite overbought, but it's close enough for me. The slow stochastic's definitely overbought. You get massive divergence. That gave you divergence from the previous high. It was a bit hard to see. After you had that inside bar, there was no doubt of your divergence, and down this market came. And at this peak here and this peak here, you had the same CCI reading, which is 133, which is the maximum that the CCI can go to, and that's because I created it that way. So, was there divergence? That was 133, that was 133, they're the same number, but this market made a higher high, and the CCI did not make a higher high. Well, you might say it couldn't, because it's gone to its maximum reading, and that's one of the subtle parts of the Danielcode. I take that as a momentum failure. I don't care that it couldn't make a higher high, because I've designed it that way. That's why I designed it that way. So that's another way of getting a blue line trade. I'm required, folks, to show you this compliance statement, which tells you about some of the dangers and risks of trading futures and Forex. There is risk involved. I'm terrified of people who start trading real money without knowing what they're doing. You can learn all about it at the Danielcode, and I do ask you to exercise caution, try and learn how to do this stuff from us, and then trade paper money. It's called a sim account, until such time as you're really comfortable with it all. What I wanted to move on to show you now was this Word document, which has been kindly prepared for me. And this has been done for me by my old mate Ben down in Sydney, FXFX. He asked me not to use his name, but I'm going to, because this is pretty extraordinary. Ben has been as I told you earlier, one of our longest members of the Danielcode, and amongst other things, he's kept and collected a record of every chart that I've ever created since about, since before 2010. And he's just put together some of the basic parts of trading the blue lines here. And you'll see at the end it has a little bit of a twist in the tail, which is interesting. So the first chart that he's showing you on this Word document is copper. And he's showing you how the Danielcode retracements, the red lines, and the blue line targets work. And you see there you have target recognition on the blue line, and the retracements then go on to support everything else. I wonder if I can find a better cursor up here, if you bear with me. I don't quite know where my cursor's gone. Okay, let's move down to the next page here. You'll see these forum code numbers at the bottom. We have over 29,000 Danielcode charts on the Danielcode website. If you'd like to go and look at any of these and check out the veracity of what Ben is showing you here, you're very welcome to do so. His next chart is copper daily, and he's showing the blue line targets to the upside. This is January the 19th, 2012. And now he's showing you how 5 days later, on the 24th, how copper validated that blue line setup by making its turn. And he's saying copper daily, January 24th, close working as per the Danielcode rules. And what he means is that this close here is right on the Danielcode blue line. And that is that type of target recognition, either the bar high-low or the close, both are valid. He then goes on to another chart to show us the high working as per the Danielcode rules. This is January the 26th, 2012. And here's a Dow Jones chart, which is May the 1st, 2011. So what he's showing you, and I think it's a great point, is I haven't just shown you convenient samples from last week's trading. He's taking us back to 2011, 2012, just to show that this thing's been working for years and years and years. This Dow chart, May the 1st, 2011, showing you blue line target recognition, again working on the close of the bar, that little dot on the right. If that's close to the blue line target, that is target recognition. He then goes on to show us the next chart here, and says this is May the 9th, 2011, and it's saying there are black lines and DC retracements to trade while we wait for the developments to the downside. And then this next chart comes out, and this is now May the 12th, 2011, and he's highlighting that there is now a blue line target at 12,367 right down the bottom of this chart. And this is how these blue lines are created. They evolve. As markets create patterns, it creates new blue lines. This wasn't on the previous, that 12,367 wasn't on the previous chart, so we had to wait for this date to see that blue line created down there. And we move on to May the 16th. Ben says, nothing says we have to only trade the blue chart. You wait for more information in the next daily update. We've still got our 12,367 sitting there, and he moves on, and there it is. The market has got to the Danielcode blue line and reversed, and that's he says a really nice trade that meets the DC protocols. And I think his comments down here are very well worth your reading. He says, I have records from 2010 to the current, which has enabled me to supply the above examples to help others how they might interpret the information. These are just a few examples to show that what happens today was repeated years ago using the blue lines that Needham produces each week. It's unfortunate that the time required to make the blue lines so time-consuming. According to his database of registered hits, there was so little support for them, he's now seen fit to reduce the effort and only produce daily signals. And I'm personally very sad about that, folks. I thought the weekly charts were terribly, terribly important. In fact, I think all of these blue line and red line charts are terribly important. And if you knew nothing else about trading, you would become one of the very best traders in the world if you just paid attention to these Danielcode numbers. Anyway, That's where we were with that. So thank you, Ben. That's absolutely fantastic. Now, a lot of the questions, we're now just having a quick look at the daily chart for gold. A number of the questions of this week center on gold. I'm going to take you to the longer-term chart in a minute and show you the where gold is, why it is where it is, and likely what it's going to do. And you can always find out about that from our fourth seal, where we cover gold and a lot of other markets, which I'll show you as well. So let's wander through this chart. And back here, we're now on April the 14th. Same deal. You can have the, we've got the fast stochastic overbought, slow stochastic overbought, and then you've got divergence on your CCI. Because you can compare any one of these on the way up. Way back here is the momentum high for the CCI at 133, as you can see from looking at the top left-hand side of the chart. By the time you got to this bar, the CCI was 119. So the chart had made a new high, but the CCI had not, and that gives you divergence. So we had a blue line sell signal, which you took, I hope, and then ran all the way down here. You're using your 2-bar trailing stop all the way through here. By the time you get down to here, you're down to a 1-bar trailing stop. But look, we have another blue line buy signal. Same setup. You can do this on your own now. Fast stochastic is oversold. Slow stochastic is oversold. CCI is roaring up even though the market is going down. That set up the blue line buy signal, and you're long in this bar here, and up it goes. And this gets there so quickly that by this second bar, I've actually then posted a plus sell signal. It wasn't a blue line signal because the stochastic of the slow stochastic had not gone up fast enough, but that gave us a plus. TO3 plus is a group of signals that I would like you to subscribe to, and it was a sell signal, and if you took that, you not only got the money on the way up, you now start getting money on the way down. When we got down to this bar, we had another plus buy signal. And this was a beauty. Off it goes. You see that? A beauty. What a beauty. The blue beauties. Off it goes. This was a plus signal. 1 bar up, 2 bars up. Inside bar, we've got a TO3 sell signal for Wednesday, which if you took it, you're in the money. It's way down here now. And this is a current chart for Thursday. So, excuse me, for those of you who are asking what's happening with gold, what's happening with gold is like all of these markets, it just moves in accordance with the Danielcode daily signals. And if you want to know what's happening with gold, just get the daily signals every day, and they will tell you what to do and what to trade in all of these markets. Now, I'm going to come back to more on gold, but I wanted to show you in the meantime two things. Let me drag this over here so you can see it. And when this changes, just give it a second, because there's a bit of a delay on the internet between my part of the world and where you are. This is the fourth seal. This is the most amazing thing you've ever seen. This is forecast market turns, and this has worked mainly off the 6-day chart. Sometimes it comes off the 12-day charts, and you can see here the statement that Frank put here. As anticipated last week, where we expected a 44-cycle low, we had a strong reversal last Thursday. Market turned right on time and right at the 59.3 retracement on the chart. How much better can it get? Well, you can have the fourth seal for any of these markets. DAX, S&P, here's DAX. Look at this, exact recognition of 1.72 extension. Very, very precise, this stuff, and with 2 expiring Danielcode time cycles. So we do the fourth seal in DAX, S&P, crude oil, natural gas, copper, T-bonds, US dollar index, and gold. And this is all slightly longer term stuff because it's coming off the 6-day and the 12-day charts. And these red lines here, you know, are the fourth seal, and they tell us, give us time and price for very important intermediate market turns. The other reason I came here is I wanted to show you this page here, which is the Danielcode trade program, for those of you that are not familiar with it. And this page comes up like this every day, and you can type in whatever your account is, and whatever risk you want to take per correlated market. Excuse me, that means that this will give you a calculation where the risk is 2% for each correlated market, and markets are correlated, so S&P, Dow, Russell, NASDAQ, and the DAX are all correlated. Gold and silver are highly correlated. The futures that have the same symbol in them, Aussie USD, Aussie JPY, any of the euros, they are correlated, which means that you're going to get a similar result out of all of those trades. So if they're correlated, we want to know that, and we want this Danielcode trade program to tell us that. So if you have a look, these are the signals for today, and some of them are not in the blue lines and TO3s because those signals have a carry forward component. The blue lines are carried forward for 3 days, the TO3s are valid for 2 days, and this program, the Danielcode trade program, it knows that, and it carries all of the signals forward, so there should be no reason why you would ever miss a signal. And it's quite extraordinary. It tells you what the market is. It tells you whether it's a buy or a sell. It tells you exactly where to enter. It's already calculated the buffers. It tells you where to put your stop loss. It tells you where the first target is if you're trading a TO3 or an R signal that requires a partial profit taking at the first target. It tells you, it gives you a code as to what the signal is, and it tells you whether it's correlated. And most of these are yes. Aussie JPY is obviously correlated with Aussie USD, and so forth. And it works out all those correlations for you, and it tells you, it suggests to you the number of contracts you should take if you wanted to work within that risk parameter. And when you type in the number of contracts that you do want to take, just as an example, you just go and ask it to calculate the total value sold, and this will do some whizzing around in the website and come back and say, if you take these trades, your total risk on this trade at entry is $288, for Aussie JPY $255, for Aussie USD. If you say I'd like to risk a bit more than that, you can just change that to whatever you want, press the button, it will recalculate very quickly and now tell you that if you want to take 5 contracts, your risk on entry would be $425. So that's just an absolutely amazing tool. We've had it for years, but some of you haven't seen it. It's a very, very clever little piece of kit. Okay, so thank you for that. Now let me move on. We've done that. We're now going to move on and have a look at this long-term chart of gold. And this should come up for you very shortly. And there it is. You can see it now. So gold ran up to September the 12th, 2011. And pretty interesting that we had a tutorial going on in Colorado Springs at the time. And Jeff Under Par was there. Lots of you other guys were there. And Jeff and his wife owned a large amount of physical gold. And at the webinar, he asked me the question, is that the high? Is that the end of the bull market in gold? And I said, excuse me, yes, it is. That's it. We had a sell signal on that day, but because we had these red lines, which are the Danielcode 4th seal, they forecast time and price. And they are very, very, very precise. The guy who's picked up my teaching best on the 4th seal is our friend Frank, who says it's the most important discovery in many generations, and it is. If you ever want to know why markets turn and where and when they'll turn, the 4th seal teaches you how to do that, and it does it with an uncanny degree of accuracy. So when you look at a chart, any chart, let me see if I can get my little red dot back here, the highlighter. When you look at a chart, these are lateral lines. These are Danielcode retracements. They are measuring a price, which is up and down here, and what we call the first degree of markets. What's happening along the bottom here is that time is moving along, and we call that the second degree of markets. For those of you that are interested, volume is the third degree of market. It used to be very important for trading. It's not so important now because the markets have got so fragmented with dark pools, options, off-market, over-the-counter stuff. And the fourth degree is an angle, and an angle combines time and price. And the fourth seal, or the fourth degree, if you wish to use it, the terms are interchangeable. The fourth seal is an angle that combines time and price, and it's a very, very specific angle. There are strict rules as to how it's drawn, and if you wanted to become an expert in the fourth seal, you should come to a tutorial. I'll be happy to teach you, but then the main thing is you need to practice. It's a hand-eye skill. You have the basic rules, but you need to do it often enough that you see it and know what's happening. So that's how we got those highs there. So Mr. and Mrs. Under Par sold a good piece of their physical gold right at the high of the market, which is absolutely fantastic, and I'm happy we were able to help with that, and we usually can. So let's just get rid of some of these bars now so we can focus a little bit more on what's happening here. So there was our high, and the market started to run down. These numbers down here that you can see, 1186, 1101, they're the Danielcode retracement numbers, and they're a ratio that I've discovered some part of it 25 years ago, and been refining ever since. And anyone who uses the Danielcode will tell you, as I've been showing you, these things are just absolute magnets for markets. So you really need to have these on your charts. They work on all time frames. This is a 6-day chart, which is our basic timing chart. So the market ran down here. Here was the fourth seal line. Look at it. Hit it absolutely perfectly. Rallied up to this higher fourth seal line here. Closed above it once, then fell down. Now, who knows what this market's going to do? Well, what I can tell you is there are two fourth seal lines on the upside. The market ignored them in this run, but it's now starting to pay attention to them. You can see that this bar right here, which is the week ending March the 10th, was held by the lower of those two red lines going from left to right. The next bar, which is the week ending March the 18th, it broke through that fourth seal line to the next one, and that stopped it like a train. It went back, it closed at the previous fourth seal line, and that's what's turned the market down. So what the market is doing is it's trying to consolidate above this 1186 number, which is the Danielcode 59.3 retracement. Frank, who does a lot of work on this fourth seal stuff, he has, if you look at the fourth seal pages, those of you who subscribed, he declared this as the low for gold, as we moved along to this second low here, he actually put in the forum, "That's the low, guys," and he transferred a whole lot of his superannuation fund into gold. And one of you has written to me about that and said, well, it's not really correct for traditional type diversified investing. And well, no, it's not, but Frank's a deep expert in the fourth seal, and he knew that that was the low for the time being, and he certainly made an awful lot of money on his big investment in gold. And that's how good you can get this stuff. If you want to study the Danielcode, you want to come to tutorials, you want to learn to do this stuff, you can get it that good. Ben, FXFX, who kindly provided with those other four seal charts, he's got a very open view about it. He's done a couple of tutorials, but he said everything you need to know is at the Danielcode website. There's 80 or maybe more articles that I've written under the articles tab. There's about the same number, maybe more, of these webinars there under the videos tab. If you just read all that material, see all those videos, it's all free. You will have a first-class education in trading. And then when you feel like it, become a member, get the practical experience of it, and then come to a tutorial, and I'll teach you this esoteric stuff of how to forecast exactly where markets turn. So immediate prognosis for gold. It's being supported by a fourth seal line. It's still being supported by the Danielcode retracement at 1186, and it's already found that support has already found resistance at these fourth seal lines up here. I suspect this is, obviously it's a consolidation. This has been going on now since July last year, so we're heading towards a 12-month consolidation nearly, where it's just been bouncing off the Danielcode numbers as it tries to build a base. And it may be able to form a base and rally, which I know is what all your gold buds want to hear, but it could equally build a base for a while and then start to break down lower. So you'll know that by following the fourth seal. Making forecasts about what markets will do months and years out is pretty unreliable. I've done that in the last webinar. I think I told you what was the likely outlook for the equities, but that can change. And the fact is that all these forecasts, when you read them, that's only what the charts are showing at the time, and subsequent price action can change that. And you know, the older saying in trading, if the charts change, I will change my mind. Right now, I can tell you this thing's building a base. It's had a decent retracement. It went exactly to the Danielcode 59.3 retracement. That keeps the trend up. Believe it or not, the longer-term trend up is still intact, technically speaking. It's now building a base. It will try to break to the upside, and that's what the market's telling us now. If that changes, you'll certainly see it in the fourth seal updates, and I'll let you know. Okay, so that was that. What else did I have to show you? I've shown you gold here. Let me go and get some of these questions, because we've only got about 7 minutes to go, and I don't want to keep you too late. Let me see these questions so I can answer them for you. Okay, Albert, please tell me where gold's headed. Well, yes, I've dealt with that. Now, Albert, you're talking about my protege, Frank, said he'd redirected his retirement account entirely into gold against good conventional diversification. Absolutely quite right. But you've been watching. So far, the market's not dipped to the point of loss for this bold move on his part. What does the future hold for gold? Best assessment now, Albert, it continues to build that consolidation until the next time cycle arrives, major time cycle we're looking for. You will see those under the fourth seal updates that Frank does for us. And in due course, gold will try to break to the upside. I don't have a great deal of faith in this any of this buy and hold stuff. I'm a trader. We trade gold both ways. It's a commodity. It goes up and it goes down, as you can see from these Danielcode signals I'm showing you over here. We trade it both ways, long and short, and it pays exactly the same going down as going up. But at this stage, best prognosis, gold's found support at the Danielcode 59.3 retracement, which is where it should have, and that keeps the dominant major uptrend intact. So thanks for that question, Albert. Next one's from Mark, who's haven't seen you for a while. Mark, you're a Danielcode member there for a while, and I think you went off and did other things for a little time. You've got a series of questions about Frank Zen. Let me give you some quick answers. The webinar next week is going to be all about Frank Zen, so I can really give you more detail then. But can I post an old out-of-date alert so give a sense of the info Frank Zen provides? Yeah, have a look under the videos tab, Mark, and have a look at the Frank Zen videos. There's a couple of them have got the pictures of the alerts on it. Basically, it says buy GC3 or sell TN. It gives you buy and sell signals, and it also gives you suggested stop loss. And the last webinar, which I think you were at, we had a lot of discussion about what happens and how the various changing the stop loss can so dramatically change the trading results, and we'll have more on that next week. How I take profit targets applied and how they communicated during the trade or at entry. They're the blue line targets on the daily charts, Mark. As I've shown you, these markets just keep running continually to the blue lines or the red lines if they're consolidating. So if you do want to take targets, you'll be looking at the next Danielcode number on the charts, and we have now changed the charts we do to make sure that we're doing daily charts for all of the markets that we cover in FracZen. So you'll see those targets there. What amount of risk is taken with each trade? Do we risk 2% or what? We don't worry about that for FracZen. It's a short-term trading system, and we don't do that. You have to take at least one, of course, to get anything, but you will know from the suggested stop loss where your stop's going to be, and if you can work out the dollar value of that pretty well immediately, and if you want to take more, take more. Do we calculate the risk from the stops to entry as percentage of total account risk? No, not for FracZen. We do that with all of our daily signals, but not this. Do our results show compounding? No, we haven't compounded. When will you release the auto trade for FracZen? No idea. It is something we're working on. Trade Navigator are now working on it with us. It's not ready, and I don't know when it'll be ready. So if you want to wait for the auto trade to come out, good luck. If you don't want all the lovely money that we've been making by trading manually, that's fine. We'll keep you up to date, but at the moment we do not have an auto trade, and the technical guys, Terry, and the guys at Trade Navigator are working on it. I have no idea if or when it will be ready. Would I trade the signals during the August month when institutional traders on holiday? You bet. Trade it all the time, mate. Don't worry about them. They don't know what they're doing anyway. So we could care less whether they're with us or gone away. Makes no difference to us. Can a subscriber switch off the signals for a week or so? Of course you can. You can turn them off at any time. Make sure you've got flat before you do. And will that throw the system off? No. Market's a short-term trading system. They just wait for the next signal, or take your holiday, come back, and pick up on the next signal. That'll be fine. Okay. Ben, Ben, thanks, mate, for that. Really appreciated the input you gave me. Ian, I've got questions from you. Could I ask you to cover these points if you do not have time? Put an FAQ. The Genie. What Forex brokerage company linked Genie with Trade Navigator? Gain is one. There are a couple of others, but I think we're using Gain at the moment, Ian. If you'd like to talk about Forex and the Danielcode, you can contact Jerry Winter, who's our preferred broker, and my personal broker. His details are under the contact page at the Danielcode website. He'll be happy to talk to you at length about that. They've just had to reconstitute I can email one to him. I don't know quite. Terry, I'm not sure what you're talking about, mate. Give me another note if you would, please. Ian, sorry. Jerry's just reconstituted all of the Trade Navigator Forex trading. It's up, it's working, it's pretty cool, and I think it's a Gain that we're using. Monthly price for Forex only. Terry, in a previous webinar, it was posted as $3.45. It doesn't seem to be posted on the web page under services. I'll forward this email to Terry, Ian. He will give you a response to that. The need to take all the TO3 signals posted on a daily basis, otherwise we fall prey to selection bias. Yes, you do. And don't forget, I should have mentioned, Ian, thank you, that when I was showing you the trade program, and we have that 2% risk set in there, that's very, very small, because you only get to that risk per contract or correlated contract that is actually elected, which means trade above the true high, true low of the previous bar, plus or minus the buffer. So once you get a bit good at this stuff and a bit confident, open your shoulders a bit. You'll find that you can take substantially bigger risk than that, which mathematically is not significantly bigger, because, I mean, you're never going to see all the trades elected. So it's only a proportion of them are elected. But selection bias is the number one problem in trading. We have so many people saying, oh, look, I've tried your stuff and I can't match your results. Well, you can't match the results because, excuse me, you don't know how to trade, and you see a little profit and you grab it, or you see a little drawdown and you panic and close the trade. If you trade the way that we show you at the website, or better still the way I teach you at the webinars, you will match the results. You'll in fact do better than the results. And what Ian is saying is the Genie, placing trades, the Genie takes 10 minutes. It probably takes about 3 minutes in all honesty, Ian, versus 4 to 5 hours to do it manually. Now, if you're doing all of the TO3 signals manually, it's going to take you at least 4 or 5 hours, possibly longer. So yes, good point. Much more sensible there to use the Genie. I think I've answered most of those questions there. I've answered Ian and Mark, and we've got another one here I haven't answered. Frederick, you want to know about gold. Okay, well, I've given you some thoughts about that. Okay, I think those are most of those. Let's see what else we've got down here under questions. As we're getting towards the end of our hour. Okay, let's run through these quickly. Is this being recorded? Yes. When will it be available? Usually within 24 hours. Is it Mitt? He's left anyway. Okay, Sita, hi darling. Ben was fabulous. He has 28,000 charts. It was in a rush prepare. I really appreciate that you did, Ben. Thank you. And you know what I loved about that, Ben, is you showed us some much earlier charts, 2011 stuff, and said this is exactly the same as John's going to be talking about today, and it is. Nothing's changed. It's just been going on for years and years, and it's wonderful. Do any of your services give all of the buy, sell, stop signals that we could follow? I don't have a good charting package. Interested in following one of the systems. Yes, Rob, it does. Our TO3, our Pro membership gives you all the signals, TO3 plus signals and the blue line signals as well. You do need Trade Navigator to run it. Rob, if you'd like to contact Terry at support@Danielcode.com, or you can call him on Skype. Just look under the contacts link at the top of the website. He can set you up with a free trial of all of that. Sage, when will the shadow charts be available? Don't know, Sage. I'm not actually terribly excited about doing more technology at the moment. I'm a Luddite. I don't like technology. I only do technology so far as I think it benefits your trading. I'm not sure that does, but we'll keep talking to them. I can tell you the guy at Trade Navigator who wanted us to do it was going to call me back the next day. That's about a month ago now. That's usually what happens. Yes, we've added coffee for the first time. Sage, we have a new signal today. We start to cover the coffee market, folks, which you will see in your TO3 and plus signals, and I'll get a bit of an article up over the weekend showing you what coffee's been doing and what to look out for. Craig, hello Craig. Can I comment on the relative strength of the black and red, etc., turns, etc.? Well, the black are dynamite, Craig. They would they'll stop a train. You get a reaction there. Incidentally, there's one different point about the blacks. Whereas the reds and the blues fail if they don't get target recognition at the high, low, or the close, the black line is not invalidated unless there is a close on the other side of it. So when the black lines are violated, it means the old swings are going to be taken out. Lewis, any news on tutorials? Yes, mate, I was trying to get one together in July. I don't think I'm going to. So it'll be August or September, likely in Los Angeles or Colorado Springs, or maybe both. I know there's a lot of you who don't like coming to LA, but we had a tutorial there a couple of years ago in a lovely little place out at Manhattan Beach. It was a nice small hotel, which suits me. I don't like big deal anything much, and we did have a great time there. We really did. Was great. Who was there? Quite a few of you were there. Toddy, you were there. Bernard was there. Our friend that I mentioned earlier, was there. Yeah, was good. Ian, what's the difference between TO3 and TO3 plus? The TO3 signals have very specific rules, Ian, one of which is that they can't have turned when the signal's created. So to create a cell in the TO3, if all other things are equal, you need the market going up. Let me come over here. This bar here could be created TO3 because it's going up. This little inside bar couldn't create a TO3 because it's already turned. In this case, because the TO3s are valid for 2 periods, it carried forward into it. But the TO3 plus are basically signals that just don't have some of the technical requirements of the TO3 or the blue line signals. Mark got that. Thanks. Funny on August trade. Okay. If I stop the blue line charts for natural gas and coffee, no, and not until we start trading coffee in FracZen, which we may, Daryl. Natural gas is not in FracZen yet. It's about to be added. As soon as it is, I'll be doing the blue line chart for that as well. And David, how about an article like you used to write for Financial Sense? They were all beauties. David, thank you for that. I appreciate that. They were great. I enjoyed writing them. Lots of people enjoyed reading them. What's happened at Financial Sense? When I was writing for them, they didn't have anyone there who knew anything about trading, so there was no technical trading articles, and they were happy to have mine. Since then, one of the owner's sons has started writing about his technical view of markets, much the same way as I used to write, but of course not so eloquent, interesting, or indeed even accurate. But he does write about, moving averages and that sort of everyday humdrum stuff, and they obviously want to protect his position. He's the son of the owner, so I guess he gets first dibs at it, and they don't like my writing anymore, and they have come up with this strange view of you have to be completely transparent about everything you're doing and show all of our readers how you do this stuff. Well, that's sort of, I do show an awful lot of how I do stuff, probably more than anyone else, but I'm not about to even try to describe in a written article, for example, how you would create the fourth seal. So yes, I'd love to write for them, David. But we can certainly put them up on the website. We'll do just fine. Thank you for that, mate. Expect one this weekend. I have really let my writing drop away because of all sorts of things. I've had a new house. I've had, in fact, 2 new houses in the last 7 or 8 months. I've got a new property here that I'm tearing apart with bulldozers and planting palm trees and strelitzia and putting in a pool, all this lovely stuff that distracts you. And it shouldn't, but most of that is in hand now. So I'm certainly going to start writing articles. And yes, David, you will see them on the website. Thank you for encouraging me, mate. It gets pretty boring and lonely pumping those things out, and knowing that there are some people interested is just what I needed. Okay, X, you don't know what it means. Beauty, beauty, it's a beauty indeed. All right, article on gold on the website this weekend, guys, ladies and gentlemen, and thank you so much, all of you, for being here today. And there'll be another webinar planned on this time next week, and I'll look forward to seeing you all there. So thank you and enjoy your evening. Bye-bye.